streak is over. The S&P 500 finally dropped today after remarks from Federal Chairman Jerome Powell when he came out and said, yeah, they're not afraid to raise rates again. Actually, they might do it at the next meeting. But everyone wants to know, are we going to call his bluff? Welcome, everyone, to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and very hot Scottsdale, Arizona.
Warm. It's warm. It's 78 degrees, you bonehead. Just because you're in Buffalo, you have no idea what it is out here.
I looked at the wrong forecast then.
Oh,
we have a very special guest with us today, Danielle Shay. She is the Vice President of Options at Simpler Trading, and she's joining us today on Buy, Hold, Sell. Welcome to the program, Danielle.
Thanks for having me. It's great joining you guys.
Absolutely. Well, I know that you're really big into educating, and that's what your firm's about, educating investors. But maybe our audience needs to be educated, because here we saw the markets just on a tear over the last week and a half, and yet things started sliding, and then they really slid in the afternoon after Powell's comments. Is this just going to be short-lived, or what do you think for the audience?
So if it's going to be short-lived, we have to see a rally tomorrow. But if we can't see a rally tomorrow, and if we get a gap down overnight, which I think is pretty possible, especially given the way that we sold off on high volume, ended up the day there down on the lows, then this rally is probably going to be over for now until we can get another catalyst to send that short squeeze moving.
Okay. Yeah, Daniel, we've been talking for the last couple of weeks. Again, I'm so old school. I still have like newspapers, the highs and lows, but and on that last week of October, when there was 6 new highs, and like 2 of the new highs, they weren't even, they were like, I don't know, some ETF or something, God knows what it was. And we had 2,800 new lows and 5 new highs. I mean, Stevie Wonder could even figure this out, that perhaps things are a little oversold, right? And I think a lot of times people in the audience don't quite recognize that the other thing I look at every day is the amount of long bets, in other words, people buying stocks assuming they're going up, versus short bets, how much short has come on. And during that same time frame, the last 2 weeks of October, shorts were rising and longs were, and that's just simply human behavior. People were scared on the margin, and on the margin, they said, I'd rather sell than, go through the brain damage here. And all of a sudden, everybody who had to sell, what you say, Danielle, had already sold. And we just needed one little, pull back from the 5% 10-year down to 4.8 and
right. But doesn't it seem like we went through this once before during this entire tightening cycle, where you had Wall Street traders that were actually thinking, okay, things are going to ease up here. They'll pause for a while, and then perhaps we could start talking about rate cuts. As a matter of fact, the beginning of this year, there was talk about potential rate cuts sometime in 2023, which was laughable.
Here you go, Todd. Have some of my freaking pot on that one. Jeez.
Exactly. But here, Powell comes out again today and talks about the 2% target. And there have been so many people on the shows that have been saying, oh, well, we'll just poo-poo that 2%. It was almost as if we were supposed to forget about it. But the chairman came out and said, no, you guys forget about it. It's going to hit at 2%. And that's what sent markets lower. I think that this is actually going to be a prolonged sell-off. I think we were very lucky over the last week and a half. If you didn't sell into the strength, you're probably going to regret it. But what do you think, Danielle? I mean, what are because you follow charts. You sent us some beautiful charts yesterday evening. I was going through your notes as well. I mean, what do you think from a tactical standpoint? Should we start thinking that, okay, should we have sold into the strength, or do you think maybe it's still a time to buy on the weakness?
So the way that I trade is I take everything from one decision to the next. And when you're looking at the NASDAQ, we're sitting up just directly underneath this key area of resistance. And it was so close to breaking through. We were right there. We had Microsoft coming right up to that new all-time high. Didn't quite make it. You had Broadcom that made the new high today, but then pulled back. And so I feel like we were just so close to breaking through and continuing on with this massive short squeeze. And then womp womp, Jay Powell had to come.
That sounds like me when I was a freshman in high school. I was so close to breaking through,
Well, see, at this point, it's, now that we've hit, I'm looking at the NASDAQ futures here, and we've hit about 15,500 and, failed. So
Right.
since we weren't able to get through that, I'd say at least to pull back into 15,000. And, for me, that's the major decision point. If we can hold up above a key psychological value, up above 15,000, maybe we get some sort of turkey rally going on. I think we can still go higher. I don't think the rally is completely dead, but certainly had some cold water thrown on it today.
And how do you, Danielle, when you look at, now you just look at the whole NDX, the whole NASDAQ, but how do you then sort of factor in the Magnificent Seven? Because, there's still 27, or excuse me, there's still 85% of all the gains in the S&P 500 or the QQQ. I mean, how do you look at those as a different, like a different island in the middle of stormy seas?
Oh,
Just
definitely.
to mix metaphors.
Oh, yeah. And so for me as an options trader, I mean, those are the stocks that I trade all the time. And so, if those ones are the ones that are doing the best, that is fine by me, because a lot of the losers, I'm not going to be trading them anyway, right? And so the way that I gauge it is basically looking at, Microsoft, Apple, Netflix. I love Broadcom. I like Amazon, Google, of course. And
love Broadcom. How about our NVIDIA? How about AMD? How about, I don't know, Marvell Technology?
Oh yeah, let's look at that one. So, basically just look at the confluence, the majority of them, are they going higher? Yes or no? And if we have Microsoft, if we have Apple, if we have Broadcom, we have NVIDIA, they're still going higher, then I think we still have a shot. You can have a couple losers like Tesla. I shorted Tesla today, which I love Tesla, but I shorted it today. I think it's rolling over. If you look at Marvell, ooh, that one looks a little bit tricky, up against quite a bit of resistance as well. So I think this quarter, we've seen a pretty big variance between the stocks that are going higher or lower, but I still think that the majority of the Magnificent Seven are carrying the NASDAQ higher.
Wow, that's good to know, because otherwise we'd be up that creek without a paddle. The other thing, Danielle, I'm curious about is on sectors. Do you also follow sectors as much as stocks?
I do. And I always do top-down sector analysis, and I focus on, which are the strongest sectors. And I focus on relative strength to the upside and relative weakness to the downside. But I mean, I can tell you this year, I have been trading primarily, semiconductors and tech stocks. I haven't really been trading much anything else. But definitely always looking for relative strength to the upside and relative weakness to the downside.
And when you're trading them, are you selling options as well as buying options, or what's your strategy?
Oh, definitely. So I do sell options as well, but I always do everything with defined risk. So if I'm going to sell, then I'm going to sell it as a spread. So I do a couple different
Tell
things.
our audience what a spread is, because already I see their brains exploding. Okay.
So selling a spread is really just using defined risk in the options market. You can sell options to bring in premium or bring in a credit to your account, which is amazing because that means you don't have to spend any money.
Right.
And basically, if you're right, then you get to keep the money at the end of the day. If you sell a credit and you're wrong, then you have to buy it back for a higher cost, which is not ideal, but that's just how it works.
But it's risk management for you. And we do a lot of spread trades on stocks that we, sort of the same thing that we understand. I mean, obviously it's like, it's like the sucking on the thumb. The Magnificent Seven is when everything's scary. Let me go back to, these guys. Why? They don't need to borrow any money. They have ridiculous margins. They are global. They get hurt a little bit with the dollar going up in value versus everyone, obviously. But did I say they have recurring revenue that's in the billions? And I think now it used to be 186 billion. It's now 218 billion dollars of cash. I mean, it makes sense to me. When I used to run a mutual fund, I didn't really do all the due diligence I should have. It's like on my hedge fund, when I built a lot of cash, it was fun. Market was going down. I had a lot of cash. I go to more than 5% cash on my mutual fund, and I get slapped by the guy. You can't have that much cash. So for the people who have to be in the market, I totally get it. I'm going to give you one idea though. We've been very long LPG, liquefied petroleum gas. The reason is for a variety of reasons, but it's really starting with the fact that the Panama Canal is only allowing 20 ships through per day. It used to be 120. So what's happened is these LPG tankers have to go like around the Cape of Good Hope, or they have to go to the Suez Canal. So they've added like 1,800 nautical miles. And we look at inflection points of demand or inflection points of rates. And the rate for these very large gas carriers went from $32,000 9 months ago to $106,000 a day today. So if you look at the chart of LPG, or you look at the chart of advanced gas, or you look at the chart of BWLLF, which is an ADR in that business. I mean, even the oil tankers, Frontline, TK tankers. I mean, they're not sexy. They're not the Magnificent Seven, but they pay us like 20% dividends plus. They've doubled in value. I just was doing a managed account review this morning. And the client says, Toby, I don't know what these VACFs or BWLFs are, but you put 50 grand in them and they're now worth 200 grand each. So whatever that is, don't tell me what they do. And my point is that underneath the market, there's the transformational events. There's this S curves of demand or pricing power that happen, and those are fun too.
Mm-hmm. I think your cameraman is actually trying to give us the look that as if you're on one of these tankers because it's going up and down. But Danielle, what is do you track the energy sector at all? I mean, because oil with it dropping right now, I mean, I would imagine if you had a couple of puts on that sector, you're doing quite well this week.
Well, first of all, I love the idea that you just gave me. I think that looks fantastic. I don't trade a ton of energy stocks, but here's what I'll tell you. I mean, I love the setup in XLE. I think that it's been really strong. If I look at a monthly chart here, I see this monthly consolidation. We call that the monthly squeeze. So that looks like it's going to break out to the upside. So for me, long-term bullish setup, but certainly short-term right now, it's breaking down. So the way that it broke down below that 200 simple, with earnings. I also always pay attention to, what the key tickers are doing going into earnings. I mean, like Chevron, it just kind of rolled over and died after earnings. Yeah. So I'll do a lot of like pre and post earnings trades, on tickers like this for these kinds of moves, but I don't trade a ton of energy. But when I see something like this, where it's breaking down below the 200 simple, I mean, that's a major sector rotation and a sector shift. So that's
also energy was the place where that was the safe place to go. You could suck your thumb and oil would go up, natural gas go up. We are short USO, which is the ETF for oil. We've been massively short natural gas because I don't know where you live. It was 118 degrees here for like a while. And then we get these advanced forecasts. And now the advanced forecast for the parts of the country that are supposed to be cold, like where Mr. Schoenberger lives, it's not that cold. Matter of fact, they're warming in so many of these areas. So natural gas prices go down. So there's a ticker we use called KLLD, which is a leveraged ETF. And you can sell put options on it and get call options. I think I just bought a new car this week based on being short natural gas. Don't tell my wife because I wouldn't, but
you got it.
But anyway, those are, mini transformations that are cyclical, are driven by stuff like whether, in the trading picks, they used to call the natural gas contract, it was the Widowmaker. Remember Eric Bowling, Todd?
Oh, yeah.
Yeah. Eric had like 6 seats at the NYMEX back in the day. That was where you traded commodities, Danielle, because I know it was sold, it was closed after you were born. But the thing was that, you could be out having a cigarette at like 2 o'clock. All of a sudden, this storm moves in, and now your long position with like 80 to 1 leverage has blown up. And you're like, it's the big one. So it is what it is. They are commodities, but energy commodities, man. When you get these long-term weather patterns that are bad for gas,
Yeah.
that's a fun trade, man.
Yeah, you got that right. Well, I love the Fred Sanford reference there too. So that's good.
Again,
But
who knows who Fred Sanford is, Todd?
well, there you go. Listen, we're going to leave it on that block, because coming up next, we have to ask Danielle about what's going to be a huge headline story next week, which is the retail sector. You have a lot of the big box, big name retailers that are going to be reporting earnings. Plus, we have the October retail sales numbers coming out. So all leading right up to the Christmas holiday shopping season. So, but we'll talk about that. So with us,
Hey, Todd,
Todd,
Danielle is way too smart to be in discretionary retail. I mean, do we really need to go there?
I know, but I did tell her that's something we will be talking about. So I know
Okay.
she's got some good quality, high quality thoughts for the audience, and it's going to be an exceptional conversation. So with us today, we have Danielle Shay. She is the Vice President of Options at Simpler Trading. Go to simplertrading.com and for more information and see what they're all about. But we'll be right back after the break. Please stay with us.
Buy, hold, sell, brought to you by CrossCheck Management.
Like the Kentucky Derby, Woodford Reserve Bourbon is a spectacle for the senses.
Girl, you know it's been way too long. I got to get back in my zone. Hey. 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 All right. Come on. 3, 2, 1. You know I'm feeling too good to be cooped up. Hey ladies, don't we look good? We came to have a good time, baby. I'm feeling too good to be cooped up. Me and all of my girls, we gon' tear it up.
Welcome back to Buy, Hold, Sell. Well, the S&P winning streak is officially over. Is this the start of bear market, or are we still going to, maybe it's just short-lived, but who knows, we'll see. But we have the expert among experts with us today, Danielle Shay. She is the VP of Options over at Simpler Trading. Danielle, I was doing a little bit of research on you. I see you have this wonderful newsletter that goes out to investors. How can the audience sign up for this?
That's right. You can find me on Twitter at Trader Danielle. You can find it on there, or you can go to 5startrader.com, which is FIVE, and you can sign up for my newsletter. I write it 2 days a week. I do all kinds of earnings analysis. I write about the options trades I do, overall market analysis, and then I also like to note in there when you can find me in the media.
Love
Wait a
that.
minute. Is it FIVE? I'm lost on that.
Yep, that's right. Not the number 5, FIVE.
Oh, you
We'll
very
also
smart. You
include
very
in the
smart.
description as well. That sounds great. No doubt. And I know investors definitely get a lot out of that, as they always do with Toby's stuff. So we definitely we'll include that in the description for everyone. But let's go into what's happening next week. I'm sure this is going to be a topic that's coming up perhaps in your newsletter. I know Toby will probably mention it as well and everything that he writes. But next week is the very important retail sales data that's coming out on Tuesday. We had an upside surprise last month, and that was, a lot of that was from back to school shopping. I know that you're looking at the tech sector, but you also are taking a peek at this retail sector, Danielle. What do you think as far as some of these big names, Lowe's, Home Depot, Target? What should investors stay away from? What should they be considering for their portfolios?
So, with retail, there's a pretty wide discrepancy right now between the heroes and the zeros. So I have a couple retail names in my portfolio. I love Costco. I'm definitely going to keep my Costco. I've been buying Amazon this year. Lowe's and Home Depot have been a little bit lackluster, but I'm still holding on to them. But then you get to the losers, right? You have stocks like Target that's just been on a downward spiral.
Don't say the word
Macy's.
Target in front of Todd. He
It's brutal.
Somehow had a love affair with Target when we first started this show, and then he just turned and it just bitch slapped him for about 6 months.
The stock is at a 2-year low right now.
Well, and you know what? When you have stocks like that are coming up on earnings, you have a lot of trading setups there, because you've got people who are still holding the stock who are saying, "Oh my God, it's going to be reporting earnings. It might fall
Yeah.
20%. Maybe I should get out before it reports." And so you have trades that you can do, before earnings, as you have those investors bailing. Then you also have the opportunity to trade the earnings report if you so choose, and say, you know what, this thing might get creamed because it has what I call the earnings destruction setup. Or if you're a little more risk averse, you can actually just wait until after the earnings report. And let's say by some miracle, they say something slightly good and it gaps up like 4 or 5%, then you can short it afterwards. So
Yeah.
Target, I think earnings destruction, it's going down. I like to shop there, but the stock is pretty much dead to me.
Yeah,
Yeah.
well, unfortunately, at Target, the only people who shop there are women like you who buy a lot of cosmetics there. Everything else, nobody wants. I mean, if they didn't sell cosmetics there, those like 85,000 square foot,
Yeah.
mausoleums they have, I don't get it. I used to get it. Now I don't get it. But what about Walmart? Walmart's 52-week highs almost every other week.
I love Walmart. Walmart's a great stock. I own it in my portfolio. It's one of those things where I can't really be buying more up at these highs. I mean, I guess if
Yeah.
you're dollar cost averaging, it's okay, but I love the stock. I think it looks great. I have a problem buying more of it at this level. So, I think it could probably go up into, let's see what my next price target on this thing would be, 170, 175. So, you still have some upside there.
Well,
Certainly,
Danielle, though, tell our audience, because what you're saying is I have a hard time communicating to my subscribers and to my managed accounts, which is basically, we're trying to, if we see the secular rise in demand, we see the secular non-cyclical rise in earnings. We're not trying to pay the most for the stock. We're actually trying to make a profit owning the stock. And so the way I tell people simply is, if you get excited, like Trade Desk today, we followed for a long time. We stayed out of it, very high price. Well, it just blew up. It's down like 25% in the aftermarket, right?
earnings destruction.
Earnings destruction, exactly. But if I was really believed in the fundamentals, which I am believing, the Rokus and the fast ad supported advertising, which goes on our show, and blah blah blah. Now I'm going to look at, but if you love Walmart, buy stuff at Walmart, right? But if you want to own the stock and you believe in it long term, then wait for it to come back, right? I mean, patience is a virtue.
Oh, exactly. And that's why this year, so I've been looking at Lowe's and Home Depot a lot, because we've had a lot of negativity surrounding the housing market. And I think that overall, both of these companies are very strong. And if you look at the longer term chart patterns on Lowe's and Home Depot, you've got a monthly chart, you've got a weekly chart. They went up, they peaked, they pulled back, they're consolidating, they're basing out. That's the moment in time where, you want to be kind of building up your share position. Walmart, great stock, but it's, right near the highs. So we cannot be, adding in a bunch of money at this price point. I know that it's always hard, because especially, whenever I'm in the media too, it's like everybody's always talking about the stock when it's at the new high. And it's like, man, you should have bought it 3 months ago, So I try to point out like the setups when they're setting up, but it's always so hard, right? Because nobody wants to look at it when it's not moving, right?
Well, that's why fundamental analysis, when you combine it with technical analysis, to me is really the key. Because my favorite ones, in terms of, oh my God, the world's coming to an end. And remember, Home Depot, and Lowe's were all pandemic pull forward stocks. I mean, that's a whole different dynamic that we have never had except for like 100 years ago. And when I was born that year, it was my second. I'm now on my second pandemic. So, so I think that's the other side of things, is that you have to say how much of the pandemic pull forward of sales, because that's when I would be expecting to have some misses in these things, simply because expectations are so high, because you can only buy so many brand new TVs like I did during the pandemic, and and washing machines and irons and freaking vacuum cleaners and everything else. Anyway, so my point is that if you learn from her this idea that if you believe in the fundamental, and that it's a secular, not a cyclical, but it's going this way, but you actually want to make money on this, then you have to take advantage of those times when there's a misunderstanding, or like we did in February of 2020, when all of a sudden, the world went to hell in a handbasket. The people were selling master limited partnerships, MLPs, because they're mostly owned by retail. They threw them away. And all of a sudden, our favorite one was USA Compressor, which rents these 10,000 horsepower compressors to all the pipeline people. You can't run your pipeline or get gas out of the ground without these things, right? The stock went from $14 to $3, and it was paying a $2.05 dividend, which they've never not paid come hell or high water. That was hard to get people to jump in. But what we did was that we had them sell put options. So they had to put the stock to them and buy some incrementally. And that stock today still pays $2 a dividend, but it now trades for $26.50. And those are the times, abnormalities are God's gift to making money in the stock market, as long as you're not sucking your thumb and hiding underneath the desk, right?
Yeah,
I like it.
That's right.
That's smart. I like it.
I don't understand from the
It's
fundamental
not just looks,
standpoint.
okay? There's more than just this.
It's a big brain in there. I just don't understand from a fundamental standpoint, though, why Lowe's and Home Depot would not do better than they are. Only because, people are still in their homes. And if they are crumbling down and there's improvements that are going to be made, you would think the DIY shops would actually do better. So if you're buying a home, the home builders aren't necessarily going to Lowe's and Home Depot. They're going directly to the manufacturer for, say, durable goods and things like that. It just doesn't add up to, in my opinion.
Everybody took all their stimmy money, and since they were inside their house for a year and a half, you get tired of shit. I replaced more stuff because I just couldn't stand to look at it again, right? And I fixed the window, and I changed the door. But a lot of that demand, Todd, was pulled forward.
Yeah, that's a good
now
point.
People are staying in their homes longer because they've owned the home for so long that they what were they going to do? Sell it and then pay 3 times the mortgage rate? But that wave is over. There's the constant, just I got to fix this. I got to fix this. If you're in the Phoenix area, you got a lot of people moving out to Phoenix. So I guarantee you that Lowe's and Phoenix, Home Depot's out here do very well. But if you're in an area that's not growing, and that's most of the United States, other than Florida, Arizona, and I can't, basically Idaho. Idaho's crushing it. Okay, but the fundamentals are just not that strong. Everybody's got their garages full of all the crap they bought during the pandemic, and now as incomes or salaries just aren't going up like this, et cetera, et cetera. I'm not bullish on them. I have not been bullish. The only one that I own personally is Costco, and I own Walmart. But that's because Walmart completely changed their business model. And that's the other thing, Todd. If your business model is I open up a store that costs me $85,000 a month in rent, and then I have to hire 125 people, whereas I can just get it on freaking Amazon and don't have to go down to, Amazon. If you believe in retail, Todd, own Amazon, own Costco. Own Walmart, and Walmart's going to do 40% of their revenue online this year, but not just bricks and mortar. Bricks and mortar is a no growth industry. Sorry,
it's very 20th century. Yeah, I know Danielle is really a big fan of Amazon, and just reading her notes, and I could see why. Like you said, Toby. Why wouldn't you be at this point?
Yeah, I don't know how to value Amazon, and I know that Danielle is not strictly a valuation type person, but when they also get $82 billion of revenue from their AWS, from their cloud business, and they add AI into everything,
Yeah.
they're going to own the
Yeah.
world.
No, I get it. Yeah, definitely understand that. So Danielle, so before we close out the show, I know you I mean, are there any other areas, any other I mean, I know you're
Give us some
concentrating on the tech
actionable
sector.
ideas.
Yeah, that's
Danielle.
what I'm trying to get at.
Say.
I'm trying to get around, or just trying not to be real direct with the question, but I want to ask you.
Yeah, that's broadcasting 101, Todd. You may want to go back to that course. You obviously flunked it.
I'm giving you the
Danielle,
Scott
give us some
Wagner
hot
treatment
ideas,
here.
some hot tips, please.
Yeah, sure. So, I
Yeah,
mean,
go for
definitely some of the, the retailers that we've talked about, I've been buying those. I think Lowe's will come back, but I guess we'll have to see. I'm a big gardener, and I feel like, I've been working on my house, and I'm one of the crazy people who did buy a house in this market, and, I got a sweet deal on it, and because of the market conditions. So,
Right.
I'm going to stick with Lowe's. But as far as the dogs, they don't agree
no
with
problem.
me. See,
Love it. Love
they're
it.
like, we don't like your Lowe's
All right,
idea.
then let's talk about Chewy. You have to be shopping at Chewy.
No. Okay, so this is the most actionable idea that I have for you right now is trading earnings. Okay, trading the pre-earnings moves, trading the over-earnings moves, and trading the post-earnings moves. That's what I do, on a more regular basis. And looking at Chewy, by the way, this is a great example of one. Next week we have multiple. We have Tyson Foods. We have Workhorse, we have Target, we have Advanced Auto Parts, we've got Sonos, Macy's.
Workhorse doesn't have any earnings.
Well, when you're looking at these tickers, and let me see, I got it coming up on earnings next week on the 14th. It's only 37 cents now.
Expert.
All right, listen, if they make 37 cents, then I'll buy you a Slurpee.
So all of these tickers, if you look at Chewy, by the way, this is the setup, okay? You're looking at tickers that did have this huge move up throughout the pandemic, and then they're coming back down, right? When you look at Chewy, for example, Chewy has been in a downtrend since, man, I have to go back even further to see. Let's see, it peaked out at 120 in February of 21. And if you look at the last 4 quarters, last quarter specifically, it gapped down 8.5% post earnings, and it has been in a downtrend almost ever since, except for last week it did rally a little bit. So when you have stocks like this that are coming up on earnings, Chewy's going to be reporting earnings on December 6th. So for something like that, it's on a death spiral, and then it gets a little bit of a rally.
Well, short covering rally.
Yeah, you can short it into the rally as it falls into earnings, as investors panic and say, "Oh my gosh, like what if it falls another 8%?" So we've got that one. Tyson Foods. This is one that I've shorted a couple times. It's trading at $46 a share now. It's coming up on earnings on the 13th. It's right there down on the lows of the quarter. Last quarter, it gapped down 9.9%. The quarter before that, it gapped down 10.3%.
Wow.
So it's like it's like 1 tequila, 2 tequila, 3 tequila, type of situation. Yeah.
And by the way, the fundamental, we should just have our own show. I'll talk fundamentals, you talk the fundamental is it costs twice as much to feed that freaking chicken and feed that cow because of the droughts in the area. And that's why beef prices are so high. And there's a point in time where even I won't pay $28 a pound for a prime steak. I'm sorry?
For a steakum.
I don't even know. I don't even know what he
Don't
said.
worry about it. It's an East Coast thing, Toby. Don't worry about it.
Yeah. I mean, I can tell from Danielle by her voice that she somewhere came from the Midwest at some point in time. But you have no excuse for that stupid remark. Anyway,
I'm from Kansas City.
All right, I was going to say that's you've got that Kansas City tan going. I think that the food business right now is, other than some booze and Celsius energy drink, my favorite stock of all time. it's a tough business now. You have at the margin lower demand, at the feed level you have higher wages, because shockingly, people don't want to take 14 years off their life by working in a stockyard or just membering animals. And there's some industries like that yeah, I would sell the call option, just get the premium, and wash, repeat again. That's like free money. Nothing's going to change for them.
See? Exactly. Yeah. That's exactly what I'm saying. You look at those companies that just the fundamentals are just rolling over and dying. And then if you can combine that with bad technicals, you're sitting down there right on the lows of the quarter. And then you also combine that with previous earnings moves, you can look at if it gapped down the quarter before, 2 quarters before, 3 quarters before. But another big signal that I'll see is, for example, we've had companies like last quarter where it actually gapped up over earnings. Maybe it gapped up like 5, 6, 7%. And that was the dead high of the quarter. And then the rest of the quarter, you just have people getting out. So anything like that, that's, I think, the most actionable in the market right now, because there's just so much movement surrounding earnings. And a lot of these retailers like Macy's, who's going back to department stores,
No way.
No way. Yeah. Nordstrom's, oh my gosh. I'm with you. It's fun to do. If you are a trader, it is fun to form a hypothesis about who sucks the most, and then go back and look at, there are 2 or 3 quarters and say, boy, this guy sucks. And how would they turn it around? The other caveat I throw into that, we were short Facebook for a long time, mostly because the metaverse was a screaming joke, and $24 billion is spending, basically he's got with a little dog left on the porch. But what they also did is they got the age of austerity going, and they cut $14.5 billion of overhead. Their average salary at Facebook from people they hired is $236,000 a year.
Wow.
If you get rid of 45,000 of those people, your earnings per share are really going to do well. And then secondarily, they got screwed by Apple, because Apple, put all these new privacy laws on their phone, so they couldn't target their ads as well. And advertisers are saying, well, I'm not getting the same ROI, so I'm not going to advertise. Well, then they applied AI, and they have even better targeting now than just Apple alone. So that's what we call at Transformity Research a transformational event. And there are really 2 transformational events that happened. One was at the bottom line, and the other one was in the technological line. And that's been our best performing stock, even before AI mania. So I'm just adding that to your list, young lady, that, these high impact S-curve inflections of demand or pricing power or salary reductions, if they don't get priced in, then those are like longs that you can make, and then you sell the put options and keep that income. So I like Facebook. Zuck's a little cray, but after the $24 billion that he flushed down the toilet, he finally maybe Sandberg just shook him up and said, I'm quitting now. I'd like to have some money.
There you go.
And she just set up a venture fund. So anyway, I digress, Todd. I'm sorry. Go ahead.
No. It's all good. It's all good. And it's valuable information for the audience as well. So we're going to leave it there today. So Danielle, one more time, how can people actually access the newsletter?
Well, you can go to 5startrader.com, which is FIVE, or you can follow me on Twitter at Trader Danielle.
Okay, I love it. Well, we will have that in the description as well.
Doing that right now. Trader Danielle. All right, I'm in.
Excellent. Well, we want to also pay a special tribute to the veterans out there, as well as their families. Thank you so much for your service. We really hope you have a wonderful Veterans Day and a terrific weekend. So on behalf of Danielle Shay and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.
I want you to smash that like button.